Eric Mwathe at mwathe.com with the weekend world market analysis for the weekend of October 31st and November 1st, 2015. Can you believe we are almost getting close to the end of the year? Wow, that's amazing. All right, let's take a look at how markets closed worldwide. We begin by taking a look at Asian markets, and pretty much we can say a little bit down for the day on most markets across the board on Friday. Take a look at how Europe closed on Friday, and we can see that Europe is closed here. Also, let's call it a little bit down for Friday's action. Let's take a look at how the Americas are trading with about 3.5 hours to go before the US market closes, and we are looking at the market here with the Canadian market down about 1.4%. We see that Brazil is down about 0.3% right now with about 3 hours to go. US markets are pretty much unchanged for the day. We'll see how we close. Oh, waiting for them to load. We see that US market right now pretty much unchanged. The biggest mover right now, we see gold down about 0.60 and crude oil is up about 0.6%. Let's begin by taking a look at the Canadian market right now, down about 1.4 before the close of the week. We go back to the daily chart and we go back to the break of the highs. So off the highs here above 15,400, there was a break in the RSI somewhere there. We can draw a line from there which would give us future sell points, and you can see that we've come back. In fact, there was a sell point here, a test and a failure of that line back in May for this high there. Market's been down since, and over the last couple of weeks we've come here, we've hit that level twice with a double top, which corresponds with this top here and this one, and now we are pulling back. We are having a relatively big down day, about 1.3%, because the market is moving below 50 today. So that's the risk. And also we are trying to see whether we can use a declining 50-day moving average for support, and maybe the market wants to coil back up after back testing the 50-day moving average. But right now also we can see that on the daily for the Canadian market, this line on the RSI can become a support level if it chooses to do so. If it can hold above that, that's good. The only problem is that if it breaks below that, then now we have a fresh sell signal on the RSI. Take a look at the weekly, and we see that on the weekly, if you take a line connecting the highs, it should look something like this. On the weekly RSI, you can see we've hit this line twice in October, and now we are pulling back. We are also back below the 10-week moving average. Now the one thing to note here is that if the 10-week moving average goes on to record a fresh low, so if the 10-week moving average makes a fresh low, that's never a good sign. So we need to watch for this. We can also conclude here that as long as the RSI is trading below this line here on the weekly RSI, because it's below this line, we have to assume that prices on the weekly are suggesting lower prices. Now, we've been taking a look at the long-term picture for the Canadian market, just like other markets, and this is true for many markets. Whatever market you are watching, you'll notice that on the long-term picture, the markets over the last month did find support on their monthly chart. So for the Canadian market, if it can continue, it's a big if it can continue building onto this support on this 20-year monthly chart, then maybe there's some upside. But the problem now becomes in the coming month and months, if we break below that level, that might be a problem. For those of you who are new to this line here, you can see that the market's been bouncing nicely on this long-term monthly chart. Every time it moves back above that line, you see that we get a multi-month, multi-year rally, and on and on. So really this is critical here, because showing support is good. Otherwise, if we break below that, that might be a major sell signal. And so we have to wait for the coming month to see whether that support is going to be respected or if the market might break that. Let's take a look at the Brazilian market by way of the EWZ. And if you take a line again connecting RSI highs on the weekly, you can see that we hit this level here beginning of October, and the Brazilian market's been down since. So clearly anything showing that the RSI is trading below this line is bearish. For the Brazilian market, it needs to be back above that line if it's to do well. So down the road, a breakout above that might relieve some of the downside pressure. For now, since we are trading below that line, we have to assume that the risk is for markets to go lower. Take a look at the Brazilian market by way of the EWZ. As long as this instrument is trading below 30.90, then this market should continue being under downside pressure. So anything keeping it below 30.90 on the monthly RSI would suggest that, generally speaking, prices are still trending lower. Let's take a look at the Australian market, which came back to test the recent resistance level on the daily, so somewhere around there. Now that level happens to be just about at 61.8 on the daily RSI, and that's where it's been finding a little bit of a resistance and a pullback ever since the highs there. The market's been finding resistance on the level around 61.8, even as you can see here. So right now seems to be a short-term sell signal until such a time as the market can move above that resistance level. Take a look at the weekly, and on the weekly we can also see that the market came back. You can see that there was a recent break here. This break in the RSI, middle of May, began this big slide here. And if we draw a line around there, which happens to be around the 50 level on the weekly RSI, we can see here we got double top resistance there, which gave us a high there. And we can also see that that resistance is what is taking place over the last week, and the market is pulling back. That by itself might suggest that this is pointing down until we can clear this resistance there. So pointing down, in my opinion, with the expectation of lower prices for now. Now if you take a look at the long-term monthly view for the Australian market, you can see that it had come back to this level of support here. And so if it can continue building on that, that's good. Anything showing support and a move higher will be constructive for market bulls. Otherwise, if it breaks below this RSI support line on the monthly, that's going to give a major sell signal, and one can expect prices well beyond recent monthly lows. Let's take a look at China, and we can see here that it had a nice month, up about 10% for the month of October. Now the question becomes whether it's going to continue holding this support line on the monthly. This line on the monthly RSI going back about 20 years. So this line goes back to 2012, lows of 2013, lows of 2014 right there, and the recent lows of the last 2 months. So if the market can continue holding that support line, that's good, and we can expect higher prices if this monthly chart remains intact. The risk is that maybe if we break through that support line, then that's going to be a major tell as to where the market wants to go. We take a look at the weekly, and the weekly is showing a little bit of a sign of a pullback, because if you take the recent lows and draw a line connecting previous lows, we broke through this level here. So there was a break in August. Now that break in August took place and the market did drop. We haven't been back to those levels. So there was a break there in August. We extend the same line and we can see that this is now a backtest failure area. So as long as the market is showing resistance here on the weekly RSI, one can expect lower prices. Again, let me draw that again so we can see what we are talking about. Is take the recent or the previous lows through this low here, extend it. You can see that if the market continues showing resistance here, then we should expect a pullback, unless the market can find a way to move above that backtest line. So for now on the weekly, looks like there's a suggestion here that the market might be looking to pull back week to week. Take a look at the daily, and on the daily we see here it came back to the break level recently. So there was a break somewhere here in June. So that June break brought the market off the highs there. We haven't been back to these highs since. We can draw a line from there. It should be something like this. And we see that over the last couple of days, the market did come here in the middle of October and did show resistance. So one can expect this to continue being a pullback area unless the market can move above the red line. So what I'm thinking here personally is, as long as there's resistance being shown on this red line here, as long as there's resistance, the indication is that markets short term are looking to go lower. And it's only until when the market moves above the red line that we can start looking for higher prices. Let's take a look at Japan, and we can see here on the Nikkei, there was a break off the highs there. Now you can see obviously that break led to a sharp decline. And we can see that this break here took place somewhere around there. And we can see that that made sense because there was a break of that RSI trend line. And so we can draw a line from there. And again, it so happens that that level is just around 61.8. So market is coming back here and is showing a little bit of a resistance there. If that resistance is confirmed, and especially if the market breaks this recent RSI lows line here, if we break through, if we show resistance on the top side and then we break through that line, then we should expect a pullback. Otherwise, if you're a market bull and you like to see this market move higher, then obviously the first thing it needs to do is to move above this line here. So it needs to move above that line of resistance by breaking out above that for this to be a recovery market. Right now, given the information we have here with the close of the week already, is we are showing resistance. My thinking here is that if that is resistance, then the next level should be that the market gives us a swing trade to the downside. Now that was the daily view. Take a look at the weekly view, and we can see that during the nice move higher, market was using the 50 RSI level for support. Every time it moves below the 50 back above the 50 with uniform action, you can see the market went on to record a nice rally. And now it looks like we might be looking at the exact opposite, which is resistance at the 50 RSI level might suggest that over time this market might be looking to point down. So right now, as long as we are seeing resistance around the 50 RSI level on the weekly, one can expect lower prices. If we take a look at the long-term monthly view going back to 1990 on the monthly chart, we can see that the break here coming off the highs of 2007 and going into the crash of 2008, that there was a break here in the RSI. Now if we draw a line around that level, so let's just draw a line there, you can see that if we back test it backwards, hope that makes sense. So if we go back in time, we can see that every time we moved below that red line, the market dropped substantially. We found resistance around that level, and the market did move substantially lower here. In 96, we had uniform action above the red line and back below it, and the market did go down off the highs of 2000. And we can see that there was a little bit of a change, and let me show that. There was a change in market behavior. Once we broke out above that red line, the market went on a nice run between 05 and 2007. We also had a nice run when the market moved above that level, which is here in 2013 all the way to the highs of 2015. So clearly, if the market can hold above that red line, then we might have a month-to-month recovery. And also at the same time, if we break below that red line, which has been a problem going back many years, if we break below the red line, then the indication is that the market might actually be looking to record a major correction in the coming months. So really, depending on what happens, the key, in my opinion, is if the market can hold above this line. Holding above that line is bullish. If it cracks back below that line, obviously that's going to be a major sell signal. Keep in mind that this goes back to support line on the monthly RSI, connecting the lows of 08, lows of 2011 and 2012, and now the lows of 2000 and over the last couple of months. So the lows of the last couple of months. As long as the market is holding above those two lines, then the market might actually go on to trade well. If we break below those two lines, then that's going to be a major sell signal. Now let's take a look at the Nifty here. The Indian market had a slightly down week. Let's not call it slightly down, 3%. That's a big down week. And the reason why it was down relatively a big size is because of this move below the 50 level. So as I always say, as you move below 50, you get a big down move. Whenever you move above 50, you get a nice upswing. So that down week, that's the reason. Just like the last time we had a major drop in terms of percentage gains was during this period here, as the market moved below 50. And we had a nice gain here, middle of July, because the market moved above 50. So we are seeing resistance on the 50. Now, my personal view is on the way up, when the market was trading well and having this nice move to new highs and all that, we did use the 50 as support. Now it looks like we are using the 50 for resistance. And every time we move below 50, the market drops. And recently, you can see we've been unable to move above 50 over the last 2 weeks. That generally does indicate a market that is prone to lower prices. So just keep that in mind. The fact that now we are seeing resistance at the 50 RSI level suggests to me that this is more and more looking like a market that is prone to lower prices. Now, that's one view. The other view is if you take the weekly closing low here and the weekly closing low through here, draw a straight line like that. You can see we came very close to that line there, and now we are pulling back. So that's confirmed resistance in price. There's also another resistance on the RSI if you draw it like that. So lots of resistance levels on the weekly. If you take a look at the MACD, you can see here the risk is that the Indian market might actually move above 50 and back below 50 with uniform action. If this ends up being uniform action above the zero line, sorry, I said 50, but above the zero line and below the zero line, any move back below the zero line on the MACD would suggest that this market is still under downside pressure. As an example, take a look at this uniform activity here, and just to be clear, I'm using a smaller time frame MACD of 583, and you can see this was uniform activity during this period here, and once the market moved back below zero with that uniform action, that was a sell signal, and that was sometime in August. So let's see what happened in August, and we can see that that corresponds with this break. So if the market, again, what I'm talking about here is the risk here is we move back below zero with uniform activity, which would suggest that that's another sell signal. If we take a look at the monthly chart on the Nifty, what we see here is take the lows on the RSI going back to late 2008, early 2009, the lows of 2011, RSI lows of 2012, and RSI lows of 2013. We can see that on the monthly chart, we did find support here during the month of October. So now, clearly, if we can continue building on that support, then that would indicate higher prices. But if we go on to break that line, that's going to be a major sell signal. On the daily, the market did come back to the level where it has been seeing a lot of resistance. Right here. And again, this so happens to be around 61.8 on the daily. And once we hit that resistance, the market was always going to struggle. We see it struggling here. We'll see what happens, but you know, the direction of this 50-day moving average is not very good. If you're a market bull, what you are hoping for here is that the market does find support now that it is coming back to test this declining 50. So you are hoping for support here and the market bounces higher. Otherwise, if it moves back below the 50-day moving average, that's going to be another reason for this market to pull back. Also, let's take a look here at the hourly. And the hourly, just want to point out that on the hourly, we are seeing both MACDs below zero. Because both MACDs are below zero, the indication is that on a short-term basis, hour to hour, day to day, the market still has downside momentum. Let's take a look here at the South African market, and we can see that on the, just like other markets worldwide, there was a recent break right there. That break brought the market off the highs. You can draw a line from there like that, and that looks like it is showing a double top resistance on that red line. Indication there is at lower prices. Now for this market and other markets to do well, they do need to break out above recent RSI highs on a closing basis. So if the market is to trade well, it needs to move to fresh weekly closing highs for it to change some of these resistance levels. For now, this is the line to watch, recent weekly closing highs. If we can't break out above those weekly closing highs recently recorded, then it seems like over time we might move lower. So again, for example, if we take a look at, let's go back to the, let's take a look here at the Nifty as an example. We can see that on the weekly, it needs to break out past the recent weekly closing high. That would be the next indication of a good market. If it can break out above that level, that is when we are going to know that the market is poised to go higher. All right. Also on the Nifty, we noted that there was some resistance line like that. So the market does need to break out above those two lines. Line number one, recent weekly closing highs, and line number two, the channel connecting recent weekly closing on the weekly chart. So market needs to be above those two lines if there's going to be any upside. Otherwise, for now, most of the charts, in my opinion, are pointing week to week to a market that wants to pull back. Let's take a look at some European markets. We begin by taking a look at the FTSE, and we draw a line connecting recent lows. And there was a break here. That break was the break in August. We haven't been back to this level since, so that was a major break recently. If we extend the same line, we can see that now the market has hit that level twice, the double top backtest failure. So that double top backtest failure suggests that this is more than likely a market that is again on a weekly chart pointing down. So we should not be surprised to see the market struggle here. So that's one view. The other view is this break line right there, which happens to be also around that break. So the same break that brought the market off the highs and this drop in August. So that same level is being tested right now. It looks like it is forming a double top. As long as that's the case, we should expect the RSI to pull back and prices to pull back. If the market is to move higher, then the first order of business is to clear that red line and also to clear the recent weekly closing high. Right now, the way the market closed, it appears that more than likely it is still showing downside pressure. Take a look here at the FTSE. We did show resistance right there. And just like these other charts that we've seen worldwide, this RSI resistance happens to be at around 61.8 on the daily. So we have multiple resistance levels here on the daily. As long as we are seeing that resistance, we should expect lower prices over time. Keep in mind we are getting very close to 50. If we move below 50 on the day we move below 50 on the daily RSI, we should expect a big down day. If we take a look at a 20-year monthly chart, and we've seen this on other market charts, so this is across the board, somewhere around here, market's been finding support over the last 20 years or so, and this still happens to be around 38.2 on the monthly. So every time we find support somewhere around here, the market went on to record nice highs. We recaptured the level above that line. Market went on a nice run in 2003 to 2007. We recaptured that line again here in 09, and we had a double top support, double bottom support here for the lows somewhere there. And now over the last month, we did find support. So this chart by itself suggests that if the market can just slowly continue adding on to this level here on the RSI, as it shows more support, the more we should expect the market to move higher. The risk again is if we break that same level there. If that goes on to be a break, or if the market breaks that support, then that's going to be, as I've been saying, a major sell signal. So the monthly chart does give markets a chance to move higher if they can continue showing this very nice support on the long-term monthly chart. Let's take a look here at the French market, French CAC 40, and we can see here the recent break in the weekly. This is something that we've seen many times on other markets. Break there, brought the market up the highs. We can draw a line from there which gives us a sell signal level, or the uniformity line right there. So right now showing resistance. That indicates that unless the market can break out above the recent weekly closing, so unless we can break out above that level, that this indicates more than likely this is a market that should struggle. We can also see the same type analysis if we take a look at the German market. So on the weekly for the German market, we can also see that it is coming back. If you take the line from the previous break, the break gives us this sell signal here in August. Market hasn't been back to those levels. If we extend the same line, you can see that this is being a back test area. Somewhere around here, if the market can't move above that blue line, indication there is that we see lower prices. If the market is to record a nice move in the coming weeks, then it needs to be above that break line or the back test line. Since we are showing resistance here, my thinking is that more than likely we might get a pullback. Also keep in mind that we are trading very close to the 50 level. As we moved back above the 50, we had a very big week last week. Very nice week as the market moved above 50. The problem is if we move below 50, a move below 50 would mean that we get a big down drop if the RSI moves back below 50. So just keep that in mind. The risk here is that for a pullback and a big down week if we move below 50. And just like the other markets, let's take a conclusion here of this analysis, weekend analysis, by taking a look at the S&P 500, which off the highs broke down. So there was a break on right here in May, which is that closing high there. Draw a line from there, and it gives you the sell signal at that high there because of resistance on that red line. And now we are back here testing that line. This has been the resistance over the last 2 weeks. If we continue showing resistance on that level, then one can expect a pullback. Otherwise, if you're a market bull, you'd like the S&P 500 to clear resistance, which is where it is trading right now. So depending on which way the market goes, we might get a nice move higher, or if we continue to see resistance on this red line, then there might be a pullback. Eric Mwadid, Mwadid.com. As always, good luck, peace, and blessings. E-A-C.